Hey, how's it going, guys? Welcome back to mentfx, and in this video we are going to replay a snippet of a one-on-one that I had with someone in the mentorship where we basically spoke about differing biases, where one person might be short, one person might be long on the same pair using the same concepts, and how both can still be profitable going long or short in that market with a guaranteed understanding, as well as going a little bit in depth as to how fake structure is formulated around this market and how your mitigations, protected lows, protected highs, and liquidity runs can basically create a story and a profitable system that you can execute. So what you're basically going to see is me talking about the fact that I have been bullish on EU just because of this break, but at the same time, I've been able to take sells inside of all this price action. And as those sells are taken, they aren't just taken to target here and here, although primarily they're targeting these points of mitigation, but they're also targeting overall the sells here, which means any buys that I get from the zone and any buys I get from the zone act as their own hedges against those sells. And as those sells get stopped out on their runs, the buys can run into new liquidity highs. Otherwise, those buys will lose, break, or break even, and the sells are what's going to make you the money on the move. And what's beautiful about this way of trading is that you can be on the wrong side of the market multiple times, but still make money through the way that you manage, the way you partial or protect yourself using break evens, or when you're on the right side, make more money than you thought you could make when, for instance, you take a sell from a 4-hour supply zone here. So in this case, we're just looking at this break of structure, this supply zone, this imbalance, inefficiency fulfilled, and the continuation lower. And as you take this sell, you begin the partial and manage to the next liquidity lows and allow the rest, even if it's a little bit, 10%, 20% of the position, to run to the lows and liquidity here, as well as the lows and liquidity here. So enjoy this. Please pay attention. This may be one of the biggest shifts that you might need in your journey. Enjoy it, guys. See you after.
These are the directional bias. Everything else is fake structure. And I wanted you to explain more about when you said it's kind of like fake structure.
Oh,
so I can be able to figure out what are the...
Okay, yeah. So let's work with that. So when I said that, that more so applied to whatever your bias in the moment was, right? So for instance, right now on EU, right, let's assume my actual analysis, which is this daily break of structure right here, right? And in this case, this demand zone and this demand zone right here, right? Both of them for me are valid to look for buys off to keep targeting the next liquidity higher, which exists right here, right?
Yeah.
Okay, so in my mind, under this assumption, right, the only thing that really matters to me under this specific analysis is this break of structure. And really, if we want to think about it in terms of ranges, right, as long as price stays inside of this and this, all I give a shit about is looking for those buys to have price basically take out this liquidity, right?
Okay. Which
means that even though there's going to be lower time frame structure trades and everything, and before we get into that, if we're just looking at this daily bias, everything other than that is fake. So what I mean by that is this break here, fake. If we go to a lower time frame now and go to like a 4-hour, this bearish structure, fake. This bigger bearish structure, fake. This bearish structure, fake. This bullish structure inside that bearish,
it's going straight
fake.
Into the POI.
Exactly, okay. Because all I care about at this point is looking to be a buyer to that liquidity from this point, and as long as the price is not invalidating my protected low, which in this case would be this low right here, there's no reason for me to deviate from that on the higher time frame. Because if I outline this to be my higher time frame objective, aka tap into this, go long, or tap into this, go long, there's no reason that any delivery of price, whether it's like this, aggressive into that zone, or very, very minute looking like it's Wyckoff, whether it delivers like this or like this inside of here, or even like this inside of the area, doesn't matter. This is all under the assumption of this daily bias fake structure. Now, that doesn't mean that this fake structure cannot be traded on the inside of price action, right? Because it can be. If you wanted to, you can trade this inside structure and it becomes real structure in the form of, for instance, if we go to like the 4-hour here. So let's delete this. Let's get rid of all these brush tools really quick. Okay, cool. Here we go. So what I'm saying is if we went to the 4-hour and we have this bias, and let's say we see, let's say this break of structure, this one's good. This break of structure here. And then we say, here's my S&D point I want to trade. Now at this point, what we do is we say, okay, this is our liquidity, this is our protected high, and really, as long as price is inside of this area, I'm bearish to at least this low, which means no matter what, whatever's inside of it becomes fake. So this bullish structure, fake. Becoming bearish, I don't care. It's fake because why? I didn't reach my POI of this desired and established range. So now I have an established range from here to here, or you could say from here to here, which is only looking to go long. But at the same time, this fake structure inside is establishing its own real ranges. And those ranges are going to, again, have that fake, the fake outs inside. So when I said fake, all I was referring to was the fact that if you have a bias printed out, and that bias is set in stone now, because you're either looking for this liquidity to be met or this to be invalidated, then all that really matters is that price gets to your point, whether it gets there like that, whether it gets there like, you know, like that, or whether it gets there like that. Doesn't matter. All of them are ultimately fake structure. And even if you zoom in on a lower time frame of like an impulse like this, you're going to see something like that inside of that. And for me, what is that? That's tradable structure, but it's fake structure. The reason I said it is because people like to see the most established trend, which in this case, you could argue is this 4-hour break of structure here, and say that that is the main overarching trend that's going to take us lower. Now, guess what? It can. And if your bias is from here to here, and we want to see this cleared, that's fine. But if your overall bias was this daily zone and your daily zone is being hit and it's being respected, then there's no reason to assume this is your sell. Instead, you should be assuming, how do I look to continue this reaccumulation range, right? In my mind, I'm looking at this and I'm going reaccumulation. I don't care that it's distributing. Even up here, it's probably distributing, right? Like on a 15-minute. Yeah, great, distribution. I don't care that it's distributing at this top of the supply zone. I don't care. Why? Because in my book, I'm already bullish. So all of this is fake structure or fake distributions that are all going to become bullish structure, are becoming bullish structure, or are reaccumulating. You see how I'm thinking about that? So I'm not deviating from what I believe. If you have something set in stone, no matter how this next pullback right here occurs, no matter how it occurs, even if it's perfect bearish structure, I don't care. All I care about is looking for that confirm to begin to go long. Now, again, like I said, it doesn't mean you can't go short here and short here and short here, but that becomes part of a newly established inside range that is entirely separated from your higher established range, which means you can trade all of these as long as they're still holding within their priorly established range, right? And the reason we know that this can work and the reason we can keep doing this is because we also know that trends don't always just keep going like this. There's a really good chance that trends just fail and fail out completely, which means that if you're part of, for instance, that lower time frames bearish structure, like here, and you get in here, which could be argued this area here, right? Same thing. Then you can already be part of a big move that goes to clear out a lot of liquidity, which means this minor move here that you get into right now, maybe even as a hedge, as it stops out your buy, or even if you get in on the sell and you already managed to break even, there's a chance that it runs to new lows completely. And that's where the bulk of the money comes from, because we can't predict every single move. What we can do is we can see a certain set of guidelines or setups and allow that to formulate a bias or a basis for an entry. And that entry can go just to target, can never meet our target, or go way and beyond expectations. And when it goes way and beyond expectations, especially with proper management in place, that's where money can be made, right? Because if you had a position on this and you took off, let's say 80% at this liquidity, if you left 20% to run to get here, that on its own, exactly, yeah, is going to be, that's going to be an insane amount of gain for no reason. That 20% could be worth that 80% partial somehow off of a move, right? There are things that happen that we cannot predict. What we do is we follow a set of guidelines, a set of standards, and if those standards are going to be manipulated over and over again, we wait for our entry criteria. And as we get that, we manage it until we see, or until we experience the thing that always happens in the market, the unexpected, and you are able to profit off of that. That's how the best traders profit off of crazy moves. They just follow the rules, and sometimes they're on the really, really right side, right? Like last webinar, I spoke about the guy that trades a 200 EMA. He sold a 200 EMA like 5 times, and all of the times it failed. And then the 6th time, he predicted a market crash that almost everyone lost money on. And he was like on news events and stuff, and everyone's like, how did you know? You're such a genius. You shorted the market at the perfect time. He's like, well, what you guys didn't see is that I shorted it 5 times before and lost money on it, right? And then my 6th time, it just so happened that the market followed my rules event, like my edge took effect, and that's where the move happened. It's the same thing when you guys are on YouTube and shit. Like, I mean, you're in the mentorship, so you fully know now, but it's like when you're on YouTube and you see something like this and you're like, yo, I want to do that. But then in the mentorship, you notice that I was taking buys here, 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 you know, in here, and got stopped on all of them until that move happened. Yeah. And then when I get rid of all these positions, because I'm not going to have my charts riddled with them, you see this and you go, he always gets the low. How does he always get the fucking low? And I'm sitting there like, you guys need to stop thinking that I'm just catching the low. I'm catching the high, anticipating it to be the low, catching the low, anticipating it to be the low, and then it's not. Catching the low, anticipating it to be low, and sometimes it is. And when it is, that's where the payoffs happen. And people are like, you just always get it. How did you know that it was this supply zone to sell? Well, I didn't. I also looked to sell this one and this one, right? Like, that's where the confusion boils up, because people, like, they want to think that there's just that perfect zone, that perfect. Hey, how's it going, guys? I hope you enjoyed that snippet that you just saw. I hope it gave you a little bit of a different perspective into thinking about the market. If you enjoyed it, leave a comment, leave a like, ask me something in the comments that you might want to see or might want to know about. I'd be happy to respond. I usually look through all my comments. I try my best to. As you can see in the aftermath, the buys that I was looking for. So I had buys inside of here that ran great partials and then got stopped to break even. And I had a buy in here on a much lower time frame that ran into a really good amount of profit. I think this was like 1 to 40. I didn't liquidate at 1 to 40. I took partials along the way. I believe at these equal highs here. I took another partial at some supply zone up in here. I think it was this unmitigated supply zone here, because as you understand, as smart money traders, we target points of mitigation and liquidity. And I'm able to target these points and be wrong about an overall move, but still be correct in terms of making money. And this is something that I want a lot of you to take from this snippet and from this video. It's a rule that Mark Douglas talks about in his book. You guys can look it up. It's a great quote. It's one of his factors of consistency. I forget what it's exactly called, but his one rule is that remember that you can be wrong and still make money. And this is oftentimes, a lot of the time, how the most profitable traders understand their edge and are able to operate in markets that they are constantly wrong in. You can be wrong about a full-on market, but still make money on that move. Just like you saw here, the client I was talking with actually had a better analysis than me. Can you believe that? Better analysis than mentfx himself. And what he did is he was looking for sells all the way through from, I think it was on the 4 hour. Yep. So on this supply zone right here, right, the last up move before the down move with the inefficiency present, he was looking for sells here to take into the liquidity points here, as well as lower. And as he was able to do that, he left a part of his position to run, and just leaving that little bit of a position, he is right on this entire sell move. And it's despite the fact that he's right on this entire sell, and he might be right all the way into new liquidity lows, even though I'm probably gonna look to confirm this again for buys. Doesn't mean I will be wrong. Doesn't mean that I won't get -1s. I'm sure I'll get some -1s in here, some +5 partials, and some break evens. That's how it works. And if that reaccumulation or that accumulation wants to run higher, I can be right on my move and he might get stopped out on a move he was already right about. On the other hand, if it redistributes, he's going to make more money on that sell because he's holding from up here and partialing and moving along the way, and I'm going to be stopped out of break even after partials. But the beauty about the way we trade is even if you're wrong, you can make money. So start to look at how your losses and wins run and check out how much RR they actually do run, because it can be the biggest change just to change up the way you manage, the way you partial, and the way you let certain things run. Once again, thank you so much for watching. If you made it this far, I appreciate that a lot. Thank you for the view time. Thank you for the algo. You guys are amazing. This channel has grown insanely quickly, and I can't wait to get you guys basically, to jam pack you guys with even more content. Once the prop firm is out, we're gonna have a lot of people come on from the prop firm and talk. We're gonna have people that are now profitable 6-figure traders from the mentorship come on and talk. We're gonna try and get some really cool people on here. But either way, you guys have been amazing. Thank you very much. Leave a like, subscribe, whatever you gotta do. I appreciate it either way. Leave a dislike or a bad comment if you feel like it. I'd love that, because at least I can then improve with it. Either way, thank you very much. If you want to get deeper and you want a structured way to begin to view this and have an option to one-on-one with me and experience a community full of people that are actually pushing themselves to be in a much better position and have proven to be able to do that throughout the mentorship month after month, feel free to join with the link in the description or the one you see at the bottom of the screen. Thank you very much, guys, and have a good one. I will see you in the next video.